This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil held its ground on Monday as downward pressure from concern about demand in top importer China offset support from strong demand elsewhere. OPEC plus supply restraint and geopolitical tensions in the Middle East. The reaction of the wider markets to the attempted assassination of former U.S. President Donald Trump was in focus. The U.S. dollar steadied after gains earlier in the session that had weighed on oil. Brent crude futures were down 20 cents, or 0.2%, at $84.83 a barrel by 12:20 GMT. U.S. West Texas Intermediate crude lost 14 cents, or 0.2%, to $82.07.
China's refinery output fell 3.7% in June from a year earlier, official data showed on Monday, down for a third month amid planned maintenance, while lower processing margins and lackluster fuel demand pushed independent plants to cut output. Refiners processed 58.32 million metric tons of crude oil in June. Data from the National Bureau of Statistics, (NBS), showed, equivalent to 14.19 million barrels per day, BPD, for the year's lowest levels so far. Output for the first 6 months was 360.09 million tons, or 14.44 million barrels of oil per day, down 0.4% from the corresponding period last year, the data showed, for the first decline in year-to-date volumes since the end of 2022, according to Reuters records.
Moving on to the top news in the energy sector.
Russia has sent ultra-low sulfur diesel from its ports for storage in the regional hub of Singapore and in West Africa, traders and shipping data show, as ample supply has slowed demand. Since the full EU embargo on importing Russian oil products took effect in February 2023, Russia has diverted its diesel exports from Europe to Brazil, Turkey, and various parts of Africa and Asia. According to shipping data from Vortexa and Capella, the Ether loaded about 100,000 metric tons of diesel in May in the Russian Baltic port of Primorsk and reached Singapore last week, where it is discharging at the Universal Terminal.
China's coal output rose to a 6-month high in June, Statistics Bureau data showed on Monday, as mines ramped up production to meet seasonal demand and safety inspections that constrained production earlier in the year eased. The world's largest coal producer mined 405.38 million metric tons of the fuel last month, a 3.6% increase on the year and the highest since December, data from the National Bureau of Statistics, (NBS), showed. The 6-month high was calculated by averaging out January to February production, since NBS reports the 2 months in a combined data release to smooth out the effects of the Lunar New Year holiday which falls in either month. Next, we have the top news in metal markets. China's crude steel output in June fell 1.3% from May, Statistics Bureau data showed on Monday, curbed by dwindling demand and shrinking steel margins. The world's largest steel producer made 91.61 million metric tons of crude steel last month, data from the National Bureau of Statistics, (NBS), showed, versus 92.86 million tons in May. It was up 0.2% from a year earlier, the data showed. Steel demand eased last month as summer heat waves and heavy rains in southern regions curbed construction activities.
Iron ore futures prices rose on Monday, underpinned by growing bets top consumer China will unveil more stimulus in its third plenum this week after a batch of economic data disappointed investors. The most traded September iron ore contract on China's Dalian Commodity Exchange, DCE, ended daytime trade 1.03% higher at 834 yuan, $114.83 a metric ton. China's economy slowed in the second quarter, data showed on Monday, as a protracted property downturn and job insecurity weighed on domestic demand, keeping alive expectations Beijing will need to unleash more stimulus.
We will now look at the top news in the agricultural sector.
Chicago wheat futures fell 2% on Monday on good prospects for both harvest size and progress in the United States and Black Sea region including Russia, European traders said. Chicago Board of Trade most active wheat was down 2.0% at $5.39 minus 3/4 a bushel at 0839 GMT. A new forecast of a large U.S. crop on Friday by the U.S. Department of Agriculture, USDA, was expected to be followed by a positive report on U.S. wheat harvest process by the USDA due later on Monday, traders said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.